with the name of Allah. This is the lecture number 7 in Management Accounting Principles for the third year Faculty of Commerce. In this lecture, I will explain more details about cash budget as a part of financial budget. Cash budget includes expected cash receipts and expected cash payment or cash disbursement. In the next example, I will explain how to prepare cash budget with cash receipts and cash payment. Example 2. A business trades in a single product, and the following number of units for purchase and sale have been planned for the next few months. Month from January to May. Sales 100 units, 120, 110, 140, and 160 units. Purchases 125 units, 140, 150, 165, and 170 units. All sales are made on 1 month credit, while purchases are paid for on 2 month credit. Sales in January and February will be invoiced at $90 per unit, and those sold in March, April, and May will be invoiced at $100 per unit. Items bought in January, February, and March will cost $60 per unit, and those bought in April and May will cost $75 per unit. Required: calculate the receipts from sales and the payment for purchases for the month of March, April, and May. The solution of example 2. Kindly notice that selling price in January and February is $90 per unit. This amount increased from $90 to $100 in March, April, and May. The purchase cost $60 per unit in January, February, and March. This amount increased from $60 to $75 in April and May. To calculate receipts from sales in March, April, and May, it depends on the policy of the company. Return to example. All sales are made on 1 month credit, so the receipts from sales in 1 month will be received in the next month. Here in January, the receipts from sales in January will appear in February, but the budget starts from March, April, and May. There is no February here, so it's all zero. The receipts from sales in February 120 units times $90 equal 10,800. This amount appear in March, but in April and May are zero. The receipts from sales in March 110 units times $90 per unit equal $9,900. This amount will appear in April, but in May and March zero. The receipts from sales in April 140 units times $100 equal 14,000. This amount will appear in May, but in March, April zero. The receipts from sales in May will be March 0, April 0, and May 0 because the receipts will appear in June. The total receipts in March $10,800, in April $9,900, and in May $14,000. The payments depend on the company policy. Here, the company will pay for purchases in 2 month credit. That means the payment for January purchase will pay in March. The purchases in February will be paid in April, and so on. Let us start by January. Payment for January purchases 125 units times $60 equal $7,500 will be paid in March. In February, the payment for February purchases 140 units times $60 equal $8,400 will be paid in April. The payment for March purchases 150 units times $60 equal $9,000 will be paid in May. The payment for April and May purchases will not appear in these budgets because they will be paid in June and July. The total payment in March $7,500, in April $8,400, and in May $9,000. Another example, example 3 is a comprehensive example. Royal Company has the following information: an April 1st cash balance of $40,000. Cash receipts from sales are April $120,000, May $250,000, and June $335,000. Cash payments for purchases are April $70,000, May $85,000, and June $75,000. Royal pays a cash dividend of $49,000 in April. Purchases $143,700 of equipment in May and $48,300 in June, both purchases paid in cash. Royal maintains a minimum cash balance of $50,000, borrows on the first day of the month and repays loans on the last day of the quarter with 10% interest expenses. Required: prepare a cash budget for the months of April, May, and June. The solution of example 3. Royal Company cash budget for the second quarter of 2021. Starting by April, beginning cash balance $40,000. This amount is given in the example, plus cash receipts from sales 120,000. Total cash available 160,000. These are cash receipts from sales plus beginning cash balance minus cash payments. The first kind of cash payments in this example is accounts payable. Cash payments for purchases $70,000 minus dividend 49,000 minus equipment 0 in April equal total payment. Total payment 119,000. The difference between cash receipts and cash payments 160,000 minus 119,000 equal 41,000. This is the ending balance, but the company wanted to be the ending balance 50,000, not 41,000. So the difference between 50,000 minus 41,000 will be loan. The company will borrow this amount. In May, beginning a cash balance 50,000. This amount comes from April. The ending cash balance in April 50,000. So the beginning cash balance in May 50,000 plus cash receipts from sales 250,000 equal total cash available 300,000 minus cash payments, accounts payable for purchases 85,000, dividends 0, equipment 143,700. The total payment 85,000 plus 143,700 700 equal 228,700. The difference between cash receipts and cash payment, 300,000 minus 228,700 equal 71,300. This difference is the ending cash balance in May. We don't need to borrow because this amount is more than 50,000. In June, beginning cash balance 71,300 plus cash receipts from sales 335,000 equal total cash available 406,300 minus cash payments, accounts receivable 75,000, dividends 0, equipment 84,300. The total payment equal 75,000 plus 48,300 equal 123,300. The difference between cash receipts and cash payment 406,300 minus 123,300 equal 283,000. This is the difference in June. But in June the company must repay its loan. That means it must pay $9,000. Also there is interest on loan 10%. That means interest expenses 10% times 9,000 equal 900. So the ending cash balance will be the difference 283,000 minus loan payment 9,000 minus interest expenses 900 equal ending cash balance in June 273,100. The total in this cash budget. Beginning cash balance 40,000 come from the April plus cash receipts from sales 705,000 equal total cash available 745,000 minus cash payments, account payable. The total of April, May and June 70,000 plus 85,000 plus 75,000 equal 230,000 minus dividend 49,000 minus equipment. The total equipment 192,000. The total payment 471,000. The difference between cash receipts and cash payment 745,000 minus 471,000 equal 274,000 plus the borrowing money 9,000 minus the loan payment 9,000 minus interest expenses 900 equal 273,100. This amount is the ending cash balance in June. The same amount 273,100. By the end of this lecture, you have skills to prepare a cash budget. In the next lecture, inshallah, I will discuss with you how to prepare a capital budget. Thank you. Goodbye.